A minority Bitcoin fork launched with high ambitions on Sunday, August 9, 2026, and it was dead within 2 blocks. When the clock struck block 961,632, nodes running BIP-110 software began rejecting standard Bitcoin blocks that did not signal BIP-4. What followed was not a revolution but a whimper. The BIP-110 chain mined exactly 2 blocks before grinding to a halt, while the main Bitcoin network carried on as if nothing had happened. That single fact, a 2-block minority chain, is the starkest data point you need to grasp. It tells you everything about the balance of power on the world's largest cryptocurrency. BIP-110 was a soft fork proposal designed to restrict what its backers called blockchain spam. Specifically, it would slash the maximum size for OP_return outputs and curb other forms of data embedding on the Bitcoin ledger. Supporters argued that inscriptions and token schemes were bloating the chain, pushing out ordinary users. The mandatory signaling period was scheduled to lock in no later than block 963,648. But the real fight began exactly at block 961,632. The moment nodes enforcing the new rules would start treating blocks without the BIP-4 signal as invalid. In effect, BIP-110 demanded miners publicly pledge allegiance to a stricter data regime or have their blocks rejected. That ultimatum set the stage for today's outcome. Miners overwhelmingly ignored BIP-4. They had little economic incentive to restrict on-chain data, especially as demand from ordinal-style inscriptions generated higher fee revenue. Large exchanges cautioned customers that coins on the BIP-110 fork carried severe replay risks, meaning any attempt to sell the forked tokens could inadvertently compromise the holder's real BTC. A developer warning on August 8, 2026 explicitly stated that selling the fork coins risked losing genuine Bitcoin. With no exchange liquidity and near zero hash power, the new chain became a ghost town from its very first blocks. This wasn't a failure of technology, it was a flat rejection by the market participants who actually move capital. On-chain data confirms the brutal arithmetic. The main Bitcoin chain continued producing blocks without interruption, with price hovering near $62,500 through the entire event. The BIP-110 branch managed just 2 blocks, at heights 961,633 and 961,634, before halting entirely. The minority fork's proof-of-work threat, floated days earlier as a last-ditch lever, proved empty. Without sustained hash power, the branch simply could not advance. The 2 blocks and done outcome turns the mandatory signaling window into a historical footnote, demonstrating that a soft fork without overwhelming economic majority is not a fork at all, it is a dead chain. Today's collapse redefines the playbook for user-activated soft forks. The idea that a minority of node operators can force rule changes by simply running different codes suffered a body blow. Real power on Bitcoin requires consensus among miners, exchanges, and the broader economic node set. That does not mean change is impossible, but it must be built on broad alignment rather than coercion. Going forward, any proposal that lacks visible support from major mining pools and custodian services will face the same rapid execution the BIP-110 chain just experienced. Observers will now watch whether the failed activation deters similar OP_return fights or simply sends developers back to the drawing board in search of more collaborative approaches. If you hold spot Bitcoin on a non-custodial wallet, your funds are completely unaffected. The fork was a dead end, and no action was required. The bigger lesson is about resilience. Bitcoin faced a coordinated soft fork attempt with a published specification, a defined block height trigger, and a moral critique of on-chain activity, and the network simply sidestepped it. The price barely moved, and the market's collective dismissal sent a clear signal. The chain that survived is the one backed by actual users, miners, and liquidity. That is worth remembering the next time a headline tries to convince you Bitcoin is about to tear itself apart.